What's up guys, I'm Darren, welcome back to yet another video. And Wednesday this week started off like any other day for me. I woke up, pressed snooze a bunch of times and officially got up, got dressed, went to the gym. And when I went on the Spotify app on my phone, I realized, oh hey, they're doing the 2021 edition of their Wrapped Up, which is this really cool thing that they do where they remind you of how long you spent on Spotify for that year. They tell you who were your favorite artists based on the amount of times you streamed them and your favorite albums. And it gives you the opportunity to share with all your family and friends and compare and see what kind of music you guys like. Now, I've thought about Spotify as an investable stock before, but seeing this reminded me that, hey, Spotify might be a great long-term addition to my current stock portfolio. So I went on Robinhood and looked them up, and I was pretty surprised what I saw. So when I pulled them up, I noticed that over the past year, the trend that they were having was in the complete opposite direction of what I would imagine a company as popular as Spotify would be. They have gone down pretty tremendously, and obviously the first question that popped in my head was, is Spotify actually something that I should be investing in? I'm not sure if any of you guys have been in a situation like this where you're looking at a company that's really popular, but the stock is showing otherwise. Maybe some of you are either investing into Spotify or thinking about investing into Spotify. Hopefully by the end of this video, you guys get some idea of what I went through to determine if this company is something that you should be investing into or something I'm gonna invest into. So Spotify is one of the most popular app and probably the most popular audio streaming app in the Google Play Store and probably the Apple Store as well, but it has a bearish state of mind. So the first thing I want to do was pull up articles that support the fact that the stock price has been going down over the past year. And when I pulled up this information, I'll be honest with you guys, it made sense, but it also didn't. The best way I can explain it is that Spotify is like that significant other you're in a relationship with and they're a great person, but they may seem too great and you break up with them because you're starting to have doubts on that greatness is only gonna last so long and you're bound to have something bad happen, so you rather just avoid it and you leave. That's kind of the vibe I was getting with Spotify, because it seems like a lot of the bearish theories surround excessive optimism based off their success. And one of the things they keep in mind on determining how good they're doing is their MAU, or their monthly active users, which has been going up pretty significantly over the past couple of years. But one of the bearish theories that I saw is that there's a belief that the growth that Spotify is having on smartphone users through their app is really high, and it's creating a lot of false optimism, especially because there's a belief that Spotify should be trying to raise their stats on other less profitable markets. When I first heard about less profitable markets, the first thing I thought was, okay, are they talking about people that use computers as opposed to smartphones? Because we're bringing up smartphones. And I figured that's probably not it. What they're actually talking about is another niche within a niche when it comes to Spotify. Their niche is audio streaming, and they receive the majority of their money, their monthly active users and subscribers, from their audio, but they also do podcasts. So the other bearish theory that I was reading on was the performance of their podcasts. And it seems like the podcasts are doing fairly well, at least from what I anticipate as somebody that listens to a lot of podcasts. I mean, look at my list. The majority of the time that I spent on Spotify, which I think was like 27,000 minutes, 7,000 to 8,000 of that was spent on the top podcasts I listened to, and I love all the other 4. But that's just me, and I'm sure that's a lot of people. And it supports the main thing that Spotify gets their money off of, which is ad revenue, which increased by 75% according to quarter 3 of this year in comparison to the year over year, or the quarter 3 of 2020, which I think made them over $300+ million. But I dug in a little more and I found this issue. The issue that I found is that despite how many monthly active users they've gotten over the past year or so, along with how many premium subscribers they've gotten over the past year, according to quarter 1 of 2021, which I know was a while ago, but still pretty relevant, only 25% of their users are actually listening to podcasts. So it kind of makes it seem like podcasts shouldn't even be relevant when it comes to Spotify. And it makes sense also in consideration of how much money they're putting into podcasts. A while ago, they released the news of them signing a multi-million-dollar contract to have Joe Rogan's podcast on Spotify. And the Joe Rogan Experience is probably the #1 podcast in the entire world. And that contract alone was in the hundreds of millions of dollars. There's also been news of Michelle Obama's podcast, Barack Obama's podcast with Bruce Springsteen, and others. And I can only imagine how much money they spend on those. So when you spend all that money, yes, you're getting a lot back from ad revenue, but how much of that ad revenue is actually coming from podcasts as opposed to coming from streaming music? So there's definitely a lot of pessimism with how podcasts are performing in relation to how much money is being put towards them. And overall, there's a lot of pessimism on how Spotify is performing altogether, despite the fact that Spotify is doing fairly well. Over the past 4 quarters, their earnings per share on 3 of those 4 occasions was higher than anticipated. That's something that investors look into that could completely adjust the stock market price once revealed. But I've also seen another chart where it shows, despite the fact that the amount of profit they're making from revenues is constantly increasing over the past 5 or 6 years, the fact that their expectations are always so high every single year is resulting in a slope going in the opposite direction, resulting in the price going down. It kind of reminds me of a company like Tesla, which I've always believed was always overpriced. Don't get me wrong, I love Tesla, I'm investing into them. But just based off one stat, which is the PE ratio, the price to earnings ratio, any company that's typically over, I believe, 40 is considered overpriced. And Tesla, last time I checked, was always in the hundreds. Now, maybe they will eventually be a little different, kind of like a unicorn company, and it'll show that their actual price is the legitimate price. But in the meantime, that's kind of what it is. And maybe Spotify's in a situation like that. But after reading all that, I'm still deciding that I think Spotify is going to be something that I'm going to invest into, more than likely a fractional sharing type of investment over the long term, because it's a company I still feel like I want to invest into in the long term. So here's my bullish theory on it. For starters, I think it is fair that a lot of people may pull out because the expectations have been set so high based off their performance over the years. But I think that's kind of a psychological game, which why I feel like fractional sharing over a period of time is something that I'm definitely going to do, and I think that's going to be of some benefit. And it's also possible that the price that Spotify is going to is a more consolidated or a more true stock price for them, and it will continue to ride that until news comes out and the price starts over and goes back up. But regardless of the optimism and the fear of them not meeting expectations, the numbers don't lie. In quarter 3 of 2021, they announced a 19% increase on their monthly active users and their premium subscribers over the past year, which directly affects their ad revenue, which is the primary source of their income. They've also been making more steps to diversify what they do, starting with podcasts. They put money towards podcast distributors to help them find more podcasts to purchase and be part of Spotify. They've even released news about getting with audiobook companies to eventually have audiobooks, which could more than likely go with premium subscribers or go with regular users and just have ads, just like audios and just like podcasts. But so we'll have to see what happens with that. But overall, the numbers are showing that they're constantly making more and more money, which showing that despite what they're doing, it's working. And again, this is one of the most popular apps ever, something that I know I definitely use every single day. So this is something that I feel like I should be investing into for the long term. But that's just my opinion. What do you guys think? Is this something that you guys invest into as well? And investing aside, make sure you share your wrapped up information in the comments below if you actually use Spotify, which I hope the majority of you guys do. And make sure you guys watch some of these other videos, which I hope help you guys out on your investing journey as they have in mine. I do appreciate you guys watching. And until next time, take care.